Our market monitor tonight is Chris Orndorf. He's Senior Portfolio Manager at Western Asset Management. Chris, good to have you with us.
Thanks, Tyler. Great to be here.
You know, we began the broadcast tonight talking about three issues that are on the horizon for next week. You heard it, I'm sure. What would you be telling investors about the climate next week?
Well, I think in the near term, the positive momentum is still going to continue. The economic data releases, as we saw today by the really strong breadth of the retail sales number that was released today, that momentum continues to be positive and consistent with a 2.5% earnings growth rate. You're going to see geopolitical flare-ups like Russia, Ukraine, like Scotland, UK, and those typically, we believe, will create buying opportunities rather than a change in the market direction fundamentally.
So let's talk about some buying opportunities. You have a couple of stocks you want to tell our viewers about. The first one is Ship Finance International. Tell us about this one, $18.49 today.
Sure. This is a company that owns and charters out ships. It's a great play on the improving global growth environment. We also believe that in an environment where Russia is playing games with its energy exports to the rest of Europe, there's likely to be an increased demand for the transportation of liquefied natural gas, or LNG. And this company, that's a positive catalyst that will benefit this stock. And with an 8.5% dividend yield, it pays you to wait.
All right, let's move on to your second one, which you like ships, and your second one is Two Harbors. You like ships and harbors. Two Harbors Investment Corp. What's going on with that one?
Well, the consistent theme on all these is income, which I think is important in this kind of an environment. We expect, as the Fed starts to raise short-term interest rates in the first half of 2015, that's going to be a headwind on stocks. And so investors who are focusing on stocks with positive and high income or investments with positive and high income are really going to, we think, weather it better. So this particular company is a mortgage REIT. The dislocation and the change in the mortgage market since 2008 has really created an opportunity in these kinds of entities. And a mortgage REIT has more flexibility than a mutual fund, so it can deliver really very high, and in this case, double-digit dividend yields. Western Asset Managers is a REIT just like this. They're great opportunities, and in this kind of an opportunity where you've got double-digit yields, you really just want share price stability.
Mm-hmm. All right. Your next pick is also one of those with a high dividend. Mercury General Corp, MCY, is the ticker symbol. What's attractive here?
Right. This is a property casualty company primarily focused on automobile coverage in California. They're branching out to other states, though. There are also some other positive catalysts. It's a very closely held company. It pays a 4.5% dividend yield. And again, it's a nice place to wait out that anticipated rise in short-term rates.
You going to try and buy any Alibaba next week, Chris?
No, I think we'll wait till the dust settles on that.
All right, Chris. Remember, salt the pasta water and go easy on the breadsticks, as our last segment said. Chris Orndorf with Western Asset Management.